The characteristics of winning traders is the same as it always was. Discipline over the positions. Make sure that when you're in a position, you know when you want to get out, whether it's a profit or a loss. In general, a good trader will know where both sides of his exit are.
What would you recommend as a starting balance for any trader?
The starting balance is what the trader is comfortable with, and then you fit your trade size to the amount of money you put down. So if you put £200 down, trade £1 a point of the FTSE. You can make 20 quid very easily, lose 20 quid very easily. That's 10%. So if I know it's only 200 quid, but if you then said, I made at the end of the year you've gone to 220, you've made a 10% return. It's only 20 quid, but it's a 10% return. Depends how you quantify all these things. So there is no ideal amount. But if you're £1 million client, I'm sure London Capital would be happily to take your money. I don't tend to look at analyst information, things like that. I tend to look at charts and try to identify supports, resistances, and things like that, and that's how I study where you should be getting into the position, where you should get out. My problem is I don't get out. I do the mistake. I don't put my stops close enough, and that's why I tend to lose. But I'm generally a chartist.
Do you have describe a trading strategy that you use? It doesn't sound like you're going to be able to offer any good advice.
No, I wouldn't be able, but it's much easier to trade when the things are in your favour. So the best idea is to not actually make a trade. I buy like that. What you do is you say you sit there and you identify where the supports and resistances are, and then you place an order so that at some point in the future, if the market hits that level, your system will buy, and then with an appropriate stop and appropriate profit point. That is the best way of getting into a position, is to identify it. It's not there at the moment, it's not there now, but if it goes down there or goes up there or it breaks through something or does what you're expecting it to do, then you pull the trigger. But you don't want to sit here going on the computer looking for every pip. So the idea is to place your orders. If they never get hit, they never get hit. But the computer system gets you into the position, not you. Because when you click buy, that's emotion saying buy, saying sell.